Your money isn't the problem, your mindset is. And today's guest is living proof that changing the way you see money can change your entire life.
So I think the first thing is removing that fear from money. When you're not afraid of money, it literally gives you this freedom, because not being afraid of money means not seeing money as something that is hard to get, not seeing money as something that if you lose it now, you're not going to be able to get it anymore. Just knowing what to do, the right buttons to press, and you're going to get money, in abundance.
Hey friends, welcome back to my Tech Journey podcast. I'm your host, Esther, and on today's episode, we're talking about something that everyone talks about, but very few people understand: money. I'm joined by none other than Jennifer Okpechi, also called the Savvy Money Girl. She's a finance coach, educator, serial investor, and author. Jennifer is building wealth across multiple currencies and multiple countries. And on today's episode, she talks about why your money mindset may be limiting you and preventing you from launching out, why you do not need to be rich to start investing, and how financial education can completely shift the trajectory of your life. This conversation is packed with so many practical insights and is applicable to you, whether you're earning $100 a month or even $10,000 a month. So grab your notebook, because this episode will challenge everything that you've ever thought about money. Let's get into it. Hi Jennifer, welcome to my Tech Journey with Esther podcast.
Hi Esther, thank you for having me.
You're welcome. It's good to have you on the show. I knew that while I was planning this season, you're one of the people I wanted to just chat with, interview. So I'm very happy that we are finally doing this. Finally.
I know. Thank you so much.
Yeah, you're welcome. So before we get into today's conversation, I'm curious, what has been the highlight of your week so far?
I took an exam, a finance exam that I passed to the glory of God.
Yay.
I think that was my highlight, because I was really panicking about the exam. When you're a reader, you feel like you've not read enough. Should I move this exam? Should I go ahead and take it? And I was like, you know what? Let's just do it. And I did it. And when I started, I was like, oh, okay, that's interesting. So yes, I think that's been the highlight of my week.
That's good. That's nice to hear. I think for me, my highlight was, the upper week I had a higher training session for those.
Oh yeah, I saw that. That was amazing.
And yeah, it was. And just getting feedback from the attendees or the people that joined the session. I got a couple of feedback this week, and it was just heartwarming to hear their responses and how hard it was for them. So that was the highlight for me for this
amazing
week. And
what you do.
Also recording thank you. Recording this session also is something I've been looking forward to from the beginning of the week. So I'm very happy that we're finally getting started and we are diving into all the fun finance conversations.
Yeah.
All right. So let's get into it. Let's start with money mindsets. I know money can be a bit tricky to talk about, because a lot of us come from households that, we treat money and see money differently. For people that come from houses where money was very difficult to come by, right? And money caused lots of stress. I would say they kind of relate money with fear, anxiety, and when it comes to money, there's just this mindset they have about it. But one thing I love about what you do is that you're helping people unlearn those limiting beliefs that have to do with money and making them build healthier relationships with money. So the first thing I want to ask is, if someone is listening to us right now and still feeling stuck in that cycle of, love-hate relationship with money, what's that one mindset shift that you want them to make? One thing that you want them to instantly start thinking differently when it comes to money?
I think for me, I'll say that I'll tell the person that money is not a bad thing, right? Money is a tool, and the Bible says the love of money, not money itself, right? So money is not a bad thing. Money is a tool. And I think that the earlier we start to recognize that in our society at large, the better it's going to be for everyone. So money is a tool. It's not supposed to be a trap. It is not like a bad thing. Like, you'll be surprised at the shame people feel to talk about money. Like, when I have clients, like, you always hear things like, oh, I know it's not like I'm stupid though, but I know my age mates are doing this, but this money, like, and I'm like, why do you feel the need to explain? Or like, there's usually that but when you're not proud, or you're not like very secure about your finances, like, even someone that is doing well, you'd be like, but like, everyone is just scared. And I mean, coming from the Igbo part of the world, I'm an Igbo girl who say things like, Igbo girls, you like money. Like, it's funny because that has never fazed me, Like, when you said, I'm like, okay, since you don't love money, give me all your money. Anyone that says that to me, I'm like, okay, since you don't love money, give me all your money, But I have friends that when you say that, they'll be like, you know what they think about Igbo girls. I don't want them to say this. I'm looking at them like, I don't know if you get my point. So I think, like, the first thing is removing that fear from money. When you're not afraid of money, it literally, like, gives you this freedom, because not being afraid of money means not seeing money as something that is hard to get, not seeing money as something that if you lose it now, you're not going to be able to get it anymore. I think that once people change their mindset about how money is a tool that can be achieved, you just need to, just like how when you want to apply for a job, you just need to do strategic steps. You're in your employment. That's basically how it works for money. Just knowing what to do, the right buttons to press, and you're gonna get money, like, in abundance. So that fear should just be conquered, like, to be honest.
Yeah, I love it. Money is a tool. I think from this African perspective, growing up, somehow we kind of associate money with, when you're poor, you're kind of holy and you're, humble, and you feel like when you have money, there's this pride. You associate money with, okay, people that are evil have money, but you should just be enough and be content with the little that you have. So I like what you said, that money is a tool. Money is supposed to help us accomplish things, and we should start building mindsets that take us away from that limiting belief, and which is what you're doing for women and even people generally. So what was your own relationship with money growing up like? I know you talked about how you're an Igbo girl, right? But how did anything in particular impact how, your relationship with money was growing up that made you become like the savvy money girl today?
My story is quite peculiar. It's funny because I don't think I've actually really said this story out loud. I've had people say, oh, Jenny, I would like to interview you. And I'm like, So I think, so in my language, it's something called akunesio bk. So what that means is money gives you courage. Money gives you audacity.
Okay.
So there's this song my dad used to love growing up. And the chorus was always akunesio bk. Nothing like that. And I always be like, what does this mean? And he will be like, oh, it just means like if you have one that has wealth. So it's not money, it's wealth, not money per se. Like if you have wealth, it gives you courage to do anything that you want to do. And growing up, when I was younger, we were just girls. My mom just had, so I didn't have a brother. And this fear of if anything happens to your dad, his properties are gonna go X, Y, Z. And my dad was always buying properties and all. So there was that fear. And we heard, like, we could hear it, like, when you go out, things like, you're like, this man, he doesn't have a male child. Like, it was like you heard the whispers, basically. So my dad was a very charitable person. Like, it got to a point that people were entitled to his money, maybe because they felt like we're all girls and we didn't like really need the money for anything.
Felt like they could take advantage of
do you
the
get
money.
my point? Like spending money on our education was stupid. Like, I remember when I was in junior secondary school in my GS1, the school I went to was so expensive. Far back then, it was about 300k a term or thereabout, and you could see the anger and the uproar, like, why is she going to that school? Take her to this. She's a female.
Exactly, like, especially from like extended family members, right?
My point. And my mom would be like, I remember posting on Mother's Day, like, my mom was kind of mother that she would give you anything regardless of the price, because she was a nurse, she was doing well. Like, it was so bad that down to the cream, like the food we eat at home, they tried to police it, because she was always like, she was a nurse, so she had to like do high nutrients no matter how expensive it is. So she would do that. And so I think, like, in my subconscious, how your subconscious is powerful? Over time, all those things literally registered. I'm thinking of taking this ad reflection. Does this work? Of the light.
Yeah, it's okay.
So
It's
I
okay
think
too.
that over time in my subconscious, that kind of like registered,
Got to
and
you
it built up,
little
but
by
I did not
little.
know how much until, so one day my mom was talking to her friend. Her friend came in from the US. She was an investment banker. She still is. And they were talking, and the man was like, okay, you could do investments, like do this to protect your daughter's future and stuff like that. And mom was like, okay. So the lady was like, this is what I do for my children. You can try doing it for your children. And I remember like I was under the table. You know how like in African house, so you just do your assignment. I was under the table literally. I just got admission into the university then. I think I was like about 14 thereabout. So I was under the table and this had this conversation, and this woman left. And I go meet my mom because like I said, I didn't know how much that was in my mind until I actually heard them talk about it and the way they talked about it. And I remember my mom like, okay, you know what? How far? What's up? Like, when are we doing this thing? And see XYZ said, mom was like, oh, we have to wait for your dad to come back. And I think that was the very first time I learned that as a woman, you need to have your own mindset when it comes to your finances. As a child, that was it. I'm like, why are you waiting for your husband to come back? Like, make it make sense to me, right? She was like, oh, because we have to take permission. And she said what she said. And I said, okay. And I remember that the next time I was going to, you're going for like uni, for post-UTME, all those exams.
Post-UTME, yeah.
I went to the bank to go and make inquiries. I remember the first I had Matthew was fixed deposit. And when I went, they're like, you're too small. Like,
why are you asking about this?
Like,
right? I'm sure that must have been their expression. Like,
you don't even have a bank account. And I think that I always thought like researching about finance was what gave me my first eye bags. Like, I used to like stay up online, researching, like going through. And back then, Nigerian market information we had was limited. So everything you would see online about money and finance and investment was tailored to suit the American and the US market. So when you're seeing investment, you're seeing US. You're not seeing Nigeria. So the only thing we ever saw in Nigeria was T-bill, CBN, and that was really quite hard for me to interpret then. So I remember like on 15 there, but when I was in school, my dad now took me to the bank, opened my account through, I don't know how he did it. Like you have to be 18 to open an account. But so somehow he opened an account for me.
Yeah.
And I remember like afterwards I went back to the bank and I was like, I want to do a fixed deposit. And it's funny because even the person like at the bank don't even know what that was. But I think that for me it was the fact that people like I understood early that whatever luxury I had, I could wake up one day and it's taken away from me simply because I am not a male child, simply because I do not have brothers. And at that time, my elder sister was about to get married, so she was going to start her own life with her own family and her husband's people. It was just me and my younger sister. And then my mom. And my mom always be like, oh, you guys are my husband. So I think that also like stuck in my head because she didn't have a male child. She'd be like, I don't have a male child. You're my son. You're my husband. So I kind of like took it upon myself to like, make sure that everything was secure. Like, both for my siblings, both for my mom. It was so bad that back then, I always tell myself, like, I hacked into my dad's email or somehow, like, I used to know when he has money. Like, once Allah just dropped, I just call everybody, Daddy has money now. Like, oh, yeah, asking for money. Yeah. So I think that fear, which looking back now, when I talked to my dad about it, he was like, I didn't even know that you had such fear at that young age. Like, it's amazing, like, what the young mind can, comprehend and what we can keep in. But, like, he never knew that I had such fear at that young age, but it was there. And then he'll tell me things like, you act about money, like, you're so eager about money. Anybody that sees you would think that I'm not wealthy or, like, I don't have money or, like, you're poor. And he didn't understand until actually I had a conversation with him as an adult.
So for you, it was more about the fear of losing what you already had, right?
Yes.
Okay.
Yes. Because it was funny because you see, when, extended family, you see when it's like, you do something very minor and they'll be out of proportion because they'll be like, that kind of like, we just want your dad to be angry with you so that this luxury you'll get, and.
So it's just stop.
Yeah, and growing up, like I always say, like I was smart and I did everything very fast. I started driving when I was 15, so like I want to drive. You see that there was literally, why are you driving? And I'm like, there's a lot of cars. Like my dad he sells cars. I'm like, there are cars. He was going to uni. I was just like, so my uni was like, there was a backyard, a back route from my house, from my village then, because my village was close to my uni. So I'll just drive. And, you could see like, it was as if they had more ownership. When somebody is entitled, like as if like they had more ownership over what
It
I'm
felt
using,
like
what
it should
belongs to
be
my
more or
father.
less
Like,
theirs,
no.
right?
And I'm like, I don't understand it. So I think like all those little things, like it's literally, and I'm like, so that was how like that was literally how I started investing. Like I would invest, I'll collect money, cause I could take my father's money for rent. Like when our tenants bring money, I'll run away from the house. I'll invest the money, and yeah, so that's just how my investment journey started. To be fair, I
Wow,
think like I
that's
wanted to show them like whether I'm a male child or not,
or
I
not.
can
It doesn't really
literally
matter.
build wealth. And the amazing part is I don't even have to work twice as hard as the male child to do so. I just need to have the right knowledge, the resources, and know where to put my resources to be able to build wealth.
Build well. Quick pause from the episode, because if you've been job hunting and feeling stuck, I need you to hear this. Hired is my 3-day career accelerator that I designed for folks like you, those that are tired of applying, hearing nothing back, and want a step-by-step guide on how to land their dream tech job. Inside Hired, I don't just talk about how to fix your resume based on generic advice. I actually walk you step by step on how to craft an ATS and keyworded optimized resume that attracts recruiters. And that's not all. I also teach you how to turn your LinkedIn profile into a direct job invite magnet. I'll also show you how to craft a job search plan that saves you time and gets you results. People like Bukola join Hired, follow the steps, and has this to say: Hired is the most step-by-step plan I've come across. I finally know what to do every single day. Now Bukola is on her way to land her dream role, and you could be the next. If you're tired of guessing and want a real strategy that works, then visit thefreelancehq.com/hired or check the description box below for a link to save your seat. Let's get you hired. Now back to the episode. I love your story. I love your story because it's so relatable. It's very relatable. And for you, it was more like you kind of started building that mindset of trying to be financially intelligent because of your experience, right? The fact that you had money, at least growing up, your parents had money, and you just got to that mind that, okay, I've seen what it means to have money, and I want to be able to sustain this on my own right now, even without my parents. Like, let me actually be intentional about the way I spend my money, the way I invest my money. It's funny because money is that thing that no one really teaches us when we're in school. Like, they can teach us so many subjects, but when it comes to money, they're quiet. So a lot of us have kind of built funny habits relating with money, like, and that's why you realize that many people are still broke despite earning a lot of money. So for you now, what would you say are some of the common poor financial habits that people have? Like, what people are doing that is keeping them still stuck financially? What have you seen?
I think that the number one thing is lack of patience. That's number one. Not wanting to acquire financial education. In fact, I feel like acquiring financial education and patience, they're like the top two. And I say this because I remember one time when I had started investing and I was traveling with my dad. It was a road trip, and we saw a sukuk. So then I started investing in bonds back home and treasury bills. I had like diversified my investment. And there's a particular sukuk bond I bought that period for a particular year. And we're driving, and I saw that the sukuk was being used to build roads in the eastern part. That's like where I come from. And I just made a comment like, oh, so this is what the sukuk bond is used for. And my dad was like, hey, come, madam investor, what's this sukuk? And it's interesting because this is someone that is an engineer in an oil and gas company that is well traveled, very intelligent. You would assume that he knows what the sukuk bond is, right? And when he asked me that question, he goes on further to that his elder brother, who is also a top management official in Shell, that's also well traveled, told him that sukuk is one rubbish something that they should not even. I don't kind of it. So When he said that, he asked me, and I'm like, how don't I explain? You know, like our parents, you know, they don't used to listen. They want to argue with you. They're thinking in my like, how do I
Because they're the
explain?
older people, right?
I'm like, how do I start
I
explaining
know.
this thing? I'm like, Sukuk is. I just said Sukuk is a bond. That's just the name of the bond. It's an investment you loan to the government. You loan the government your money, to invest, and then government pays you back. And I was like, and I'm like, no, because investing in government is low risk. Because even if government cannot like fulfill their debts because of any issues, all they have to do is reprint more money to pay off their investors, even though it might, increase inflation. But basically, that's what they do. And that's really like secures your money as an investor. So I think most people don't want to get that financial education. And we see it a lot even on social media nowadays where people that are not educated or do not have that exposure just start talking based off of what every other person is saying or based out of their feelings. Like, so people nowadays want to invest based off their emotions and their feelings, which is why to be a good investor, you have to have emotional intelligence and you have to be able to control your emotion. You see someone saying, oh, I cannot invest in Nigeria, not because the numbers are not good or because, it'll be Nigeria again. You know that see finish like it's my country. Leadership is
Like,
bad, so automatically
everything that's spoiled, that
You
kind
get
of
my
thing.
point. And they're not crunching the numbers, and they're literally online arguing with people. And there are people that are literally making mad money investing in Nigeria, not just individuals. I'm talking about governments of other countries, big investment firms in other countries are coming. Because to be fair, SSA countries, that's sub-Saharan African countries, are the only countries that give double digits interest on investments. So it's quite appealing to foreign
To
investors.
invest.
There's people arguing. Like I even saw one like on Twitter yesterday, and I didn't even have chance to even type. I just scrolled and just passed. So you see that lack of, and nobody wants to get financial education. They just hear someone say one thing, and then based off of the feeling they have about a particular investment or a particular whatever opportunity, they just go with the flow. They do not even ask questions, or even like try to research. Then another thing is patience. So generally, back for Africans, I've said a lot in Africans, not the British or the other countries, we are not patient, right? And I always tell my my people in my community is like, even if you don't invest, 1 year will pass, 2 years will pass, 3 years will pass, right? And your money will still be there. So nobody wants to invest for 1 year for a 5% interest or for a 4% interest. And I always say this, like, I think that's why money mindset comes in. Because for me, I'm like, the interest is not your problem. You have a capital problem. Because if I tell you to sell a house that retails for 1 billion naira or 1 billion pounds, and I was going to give you 2% of 1 billion, you will sell that. You would try your possible best
To sell it.
to sell that property. So people always, they're not patient, like, oh, I have somewhere I'll put my money, or that's why Ponzi scheme come and everyone
And a lot of people
falls in
fall
it. Like,
prey.
you would think that with
Yeah.
all the education that people will not fall, but tomorrow and that Ponzi scheme come, and when you hear the amount that they've taken away, you'll be gobsmacked and you'll be like, how are people still falling? Because everybody wants quick return. Nobody wants to be patient. Nobody, like, they forget that the same way your efforts compound when you're building a business or you're going to school to get a skill, that is the same way your effort compounds in investing. Your money can compound and grow. You just need to just have the financial education to understand that there's a difference between simple interest and compound interest, and then actually now having the patience to be able to allow your money to compound for you. So these are like the two major mistakes I've seen people are just they are not patient at all. Like, they are not.
People are not patient. And when you were talking, I think I just remembered one time I read the book Psychology of Money, and I think
that's one of my favorite books.
there was a story of a man that maybe he was a mechanic, and over the years, at the end of the day, he had a lot more money than like people that just wanted quick returns. He was just investing very little. And the whole point was he was patient and he was consistent, as opposed to people that just come in, they just want quick returns, and somehow high risk, the money crashes and they lose everything.
I tell people, like, all it takes is just one market correction to change your investment story. Just a slight shit. Like, for example, Nvidia went from being a mid-cap company to becoming a higher market cap company within a space of 1 year, and all it took was just market correction, economic change and consumer sentiment shift. That was all it took to take that company
Yeah.
from like 0 to 100 real quick.
Like
So I
just
thought,
like
like,
that.
but you can only take advantage of that if you're actually invested in the market. Whether you're invested in Nvidia or maybe you're invested in an ETF that has exposure to Nvidia, that's when you can see like your investment portfolio grow.
Yeah.
So
So
yeah.
we'll still talk more about about investments
Yeah,
shortly,
that's
but
okay.
I want us to talk a bit more about like just managing finance, because I know that investment is like the next step. The first step is even being able to manage your finance and make money work for you. So I know lots of people listening, especially people that are in tech, wherever, they earn a lot of money, but I've seen that it's one thing to earn money, right? It's another thing to keep money. The fact that you earn money doesn't mean like a lot of money. For example, 100k, you can't get rich off of 100k per year. It's reasonable, right? It's probably more than the average person is earning. But at the end of the day, you see that there are certain things that people do that just makes this money disappear. And a lot of times, even I've seen it, the months that I earn not so much, I'm still able to live within my means. But the months that I earn a lot, somehow I
Yeah.
spend a lot more. And I think they call it lifestyle inflation.
Inflation,
So
yeah.
yeah, I guess how can one have that balance between enjoying the money you make and still being financially prudent or living a soft life? How can you
Yeah.
find that good balance?
So I think like I would like to talk about what works for me. So I always thought like if I coach you or if I'm talking with other financial educator advice, I feel like my take is quite I don't know, I'm kind of like maybe someone might call it contrarian investor. My take on investing is quite different, especially because I like to like talk about what works for me. Because when I started investing, I was not in employment, so I was investing my parents' money. I wanted to give me for upkeep, right? But somehow I managed to scale that. So and what I would say is it's good that you said like lifestyle inflation. So when it comes to building wealth, there's something called the accumulation stage, right? It's all about having your priorities. So what is important to you? So it's funny because my group, I did like a 21-day financial challenge, and I spoke about this yesterday and today. And I'm like, for me, what I've always done has been value-based budgeting method. So what this means is I only spend my money on the things that make me happy, things that are valuable to me, things that I love. Like I always say, like for example, you would probably never see me driving a very expensive car. Maybe not anytime. So maybe in the future, maybe my mindset will change. But ordinarily, you will not see me driving a very expensive car. You will not see me dining out regularly. Like how people always go out to like top restaurants. That's not my style, right? But you do see me spending money on business class tickets or going to luxury vacations or try. So basically, or giving my family members money. But probably I can literally give my staff money to go to an expensive restaurant while I'm at home eating
But
pizza
know
or burger.
yourself, right?
Yeah. And I'm at home eating chips and burger, drinking water. So for me, value based budgeting, and I say this because if you have values, which to be fair, I always say things like I feel like a lot of people don't have what they honor, which also relates with values. It makes budgeting easier for me as opposed to the regular method. So whatever that doesn't add value to my life or that doesn't contribute to my long-term goal, I do not bother spending my money there. So why am I spending money to impress you on Instagram when if I'm poor, if I'm broke, I cannot call you and say I have I'm broke. I don't forget my point. Like that is not what I am after. So those are kind of things you will not see me spending my money on. So then accumulation. So when I started investing and building wealth, I for like a couple of years I didn't used to shop for clothes. Like it was funny because I remember when that was when I moved to Abuja after my NYSC. Then I invested for a number of years and then I moved to Abuja, and my dad had given me, and it's something I used to do before. I've stopped it. If you give me money to buy something, I would invest it. So if you want me to have something, you have to buy it for me, something of that nature. So my dad gave me money to like, okay, furnish your house, and I just bought the basics, and I did not buy AC, I didn't buy gen, and then the weather, Abuja weather can be so hot. And one day my friends came and they're like, you don't like when you don't like you're poor, like start spending money on yourself. So I was always like accumulating, and it's now a habit. It's now part of me. So I always say things like I prioritize my investment before my rent. So if I get money today, I ask myself like, okay, the first at least about half of it goes to investing.
Invest.
So when it comes to managing your finances, it depends what do you prioritize. Just like you said, Esther, anytime the month where I feel like I did not make a lot of money, both from side hustle and salary, and I had, let's say for example, I made 1K, and I'm like, you know what, I'm still gonna invest 500 anyways, or I'm still gonna invest 400 anyways. It's amazing how the balance works for
You
me.
just find it just works, right?
You know why I say that? I
Everything
realize
just
that.
aligns.
Yeah, I realize that why that works is when you have money in your bank account, your mind subconsciously makes some decisions that you do not know,
Just
which is why
realize that.
tracking your expenses is important.
Yeah.
So, for example, you might want to buy, if you had that money, like before you invested it, right? Let's say your mind, you didn't invest your money, like, I don't have any money, I have one.
For me, I'm doing online shopping.
Exactly. You might want to buy, let's say, a box of chicken wings, for example, and then you see where they say 8 chicken wings is, let's say, £5.99. If you increase it to 14, you pay £7.99. No, £10.99 or £11. So you know, as someone that is not on any budget, you see how much is £2, like, you know, and then I used to do that before, then you go ahead to just add extra £2. But now £2 here, £5 there, £3. Over time, it adds up. But if you're on a budget, you've moved on your money for your investment, and then you have XYZ amount to work with, then you realize how your brain reconditions itself, because then your brain already knows that, okay, you're in survival mode. So if you're actually buying that box of chicken and you see that offer, you just keep and pass. You'll be like, why do I need an extra 4 pieces? I don't get my point. Like, you do. Yeah, so like the minor changes that you can usually, they say, like, of course, when you have money, your inflation. So people sometimes they don't even do it knowingly. It just happens. Like, it's just a human mindset. Oh, I have enough money now. Oh, I can actually finally get that back. Oh, this back social media. Oh, it looks nice. Let me go and get it. So they actually are not even processing or thinking about it. That's because most of them don't have a plan for their money or a budget. And I say this, like, making money for me has become a lot more enjoyable since I know how to multiply money and I know where to send my money to. When I started investing, I thought I didn't have a paid job, but seeing how my money was growing, I knew that, okay, if I put more capital, the growth would be faster, like to be bigger. So my focus was on building my capital, which now led me to start looking for how to make money now to invest, instead of always calling back home, my people give me money. So I think that over time, that was actually what actually exposed me to like the world of side hustling, online money and all, because I started doing paid service like 2013, 2012, like back in Nigeria. And I was teaching online. That was how I started earning. That's how I earned my first FX in my first dollar. I learned how to, you know, I went to Dubai to do eyelash extensions. So anything that would give me money, like all these skills, making skills, I'll just acquire. Like I'm like, God forbid that tomorrow something happens, and I must definitely have something to fall back.
So
like,
more or less, like you were investing in yourself.
Yeah,
right?
in myself. Yes, yeah, so I have more. I feel like I have multiple skills. Like I don't think like I'm ever going to go broke, and plus also not multiplying money. So it's more like I was doing things to, and so investing for me became a priority, even till date. Like when I get paid, investing is a priority. So I think one thing people do, they don't give themselves grace. You know, you need to give yourself grace as an investor.
Yeah, go ahead.
You cannot expect to hit 100K immediately you start investing. Everybody's journey is different. Just like how, like someone like me, I have financial privilege, so I'm able to like, if I'm able to like flex my life, and I feel like if probably I had people depending on me, I probably would not be traveling as much. And to be fair, I probably would have had a lot more money invested. But I have those privileges. Now you have to ask yourself, how can I work around my privileges? Like, how can I plan for my money? What is important to you? How can you protect what's important to you and be consistent? So people don't give themselves grace, because you see someone that says, okay, I want to invest £500 every month. And then they call me, Jenny, I did not invest £500 last month, or I didn't invest. I'm like, okay, so what did you now invest? They're like, nothing. I'm like, you know, and I find that it's relatable when I tell them what I do, because there are months, because I have like, I don't have a fixed amount anymore. Well, before that, I would be like, oh, fixed amount. So, you know how they say automate your investments? I don't do that anymore. I was telling like a client that.
Why do?
Because my brain is investing. Like, I wake up in the morning, it is investment.
You're thinking about what to invest in.
So I naturally am very disciplined without the automation. So I invest every month. And now in Nigeria it was monthly. Now in UK I invest weekly. So, and why I say I don't do automation is because that is what people have issue, because it liberates you from that. It gives me that freedom, liberates you from that, like you have to invest a fixed amount every month. I mean, cost of living is high, we're always crunching the numbers, things change, right? Someone that could invest comfortably £1,000 every month last year or two, will probably not be able to do the same now. And which is why I say people get demotivated and fall off the bandwagon when you think like, oh my god, I have to invest, and then I start thinking which is more important, surviving now or investing for the future. So what I always say is, if you want to invest, the point is to agree that you want to invest a set amount every month. So if you say you want to invest £200 this month or every month, fine. But the months where you cannot invest £200, even if you have £20, the goal is to invest and to be consistent, because time in the market beats more money in the market. So I think that's the what you can now do is subsequent months, whenever you have excess income, instead of now spending it on frivolities, you can now top up to make up for like the months you didn't invest. That is what I do. Because people
So
are like, oh, I want to invest
month you have can
yeah,
always eventually they even out when
exactly.
okay.
And so so me, I don't, so I tell people like, because my brain, like I already know like, okay, what I want to buy like next week, what I want to invest. So for me, it's easier because I've built that habit. I've been doing this for what, like almost getting to like 18, 19. So it's already part of me.
Part
Like,
of you.
yeah, so it's a habit that is second nature to me. So if I don't invest, like I know some, like I know you're thinking like something important, like I've missed out on something. That's how it works with me. So
Just okay.
so giving yourself that grace and saying, okay, the point is to keep going and to build my portfolio, regardless of what happens. People like, I didn't, I could not invest, so I just did not invest at all. I'm waiting for when next I have £500 to invest. I'm waiting for when next I have, and I'm like, no, that's not how it works. Because remember, I said again, all it takes is one market correction that can turn even your £100 to £1,000. If you invest in a stock that does 500% or 1,000% return, your £100 can turn to £500 to £1,000. But you actually have to be invested for that to happen for you as an investor. So I think that's the mindset shift that everybody needs to know. So I always like, financial education advice is generic. Like everybody will tell you everything. It's general rule of thumb. Like we all say the same thing. But you actually have to take all that information and now tailor it to suit you as a person.
Your own
and get help if you want. Because everybody says, oh, 50, 30, 20. It does not mean it's going to work for you. Envelope doesn't mean it's gonna work for you, right? But I think for me, I always say, like, I feel like actually as a low income earner, value-based budgeting method, if you have a person of value, like it helps you to like plan for your finances effectively and invest, because you know that as a low income earner, your top priority is to increase your income, which means you have to put your excess income in places where that income can grow for you, whether it's investing in growth investments or investing in upskilling yourself. You know that both of these two options can literally help you to increase your income. So then you're saying no to spontaneous trips to go to a country. I don't know if you get my point. You're saying, tell your friends, okay, sorry, I can't afford to come with you guys on these trips. Oh, I can't afford to go to this restaurant. Oh, I can't afford to go to this cinema date, because you already have your priorities.
Your priority sets.
Yeah.
Okay. I know we've talked about investing, and a lot of times many people struggle with the concept of investing. So I want us to break it down, right?
Yeah.
I think they struggle with it because they feel like they need to make a certain amount before they start investing, right? They feel like, oh, I'm still making this small amount. When I start making this amount, I'll start investing.
Yeah.
So how would you balance saving? Some people say, oh, I have a savings, I save. But how would you balance savings versus investing, right? For someone that is earning not too much, how can they start investing even with the $100, 10,000 naira, however small? Like, what's that immediate thing that a newbie to investment should do?
So when it comes, I think like for a newbie, again, like I said, it depends on your priorities, because even your savings can be invested, right? So, but the greatest misconception is the fact that everybody thinks they need to have a lot of money to start investing, and that is absolutely wrong. So I think that the first thing, which is why I say acquire financial education, like once you have the financial education, it gives you knowledge of what is accessible and available to you as a beginner investor. And Can you hear me? I think we're reconnecting. Okay, better.
Okay, I can
Actually,
hear you.
showed
Yeah.
you're glitching. So when you
Oh, okay.
literally acquire funds, then you don't know. Okay, this is where I want to put my money. So when it comes to saving, I always say, like saving is the easiest way to build momentum and to build that habit of constantly setting your money aside. So for most beginner investors, I always recommend savings. However, but if we're talking about inflation, your saving is not going to outpace inflation.
Mm,
You get my point. So the point is, the first thing first is understand that investing is accessible to you regardless of how much income you earn. The problem lies with you actually prioritizing your savings and your investment and choosing to set aside a set income to invest, even if it is £5 or $5 every month.
mm.
That is something. Then you can build and scale and increase as your income increases,
Okay,
right?
first. Okay.
And so that is like the first thing, like it is accessible to you. Then I think like the next step basically, which is what everybody also finds like overwhelming, is choosing where to invest and how to invest. So there are a lot of investment platforms and financial platforms. Although I always tell people like try to always boycott the middlemen. That would give you
Mm.
more return on your investments if you're able to boycott the middlemen.
Okay,
But
what do you mean by the
however,
middleman?
yeah, like for example, their asset management firm. So their investments I will not buy from the bank. That I'll buy
Mm.
directly from asset management firm because banks will charge you their own fees, you know, thereby reducing like your return on investment.
The
Yeah,
return on
just like how like
investment.
in
Okay.
like for example, if you want to invest, let's say in bonds or directly issued government bonds, government can be saying, okay, come and buy bonds and we'll give you 5% interest. If you go through third party, they probably offer you 4% or 4.5. That's aside the fees that they will charge. I mean, that's how they make money, right? The ease of access
Mm-hmm.
for you as an investor. So I think because when I started the hard way before the fintech platform. So I'm used to like I don't even like to deal
Directly going.
unless I have no choice. I'm a very patient person. I'm used to like going directly, to bid. So find an investment firm that suits you. Um, Generally, as a beginner investor, if you do not have a lot of money, then of course financial platforms are like your best bet because those are the ones that pull funds from multiple people to invest. So you can start with that. Build your knowledge, build your investing habits, your savings habits, and then over time you can now like move to like a proper asset management firm. So the first step is just like getting financial education, building the habit by saving. It could be something as simple as every single month when you get paid, you just move like a small portion of your money somewhere to a high yield savings account, which you can
Mm-hmm.
ask your regular bank, and you can ask a regular bank, or I want to open like a high yield savings account that is usually different from your savings account, and then you just move the money there every month. So you're saving your money, and your money is also working for you. So your money is also growing because it is in a high yield savings account. And I think that once people do that, they start seeing like the little bits and pennies and pounds on their savings, it motivates them to basically invest more.
I
That's the
want to
funny thing. For
put
some
more.
people, it motivates them. For others, it doesn't. I don't know how it works. Like when I started investing, like and I was seeing this small amount of money, it motivated me to start looking for like extra income to pull. I was seeing people that are like, this money is too small. Like only God knows how long it's taking for me to like build wealth. So I think that's a mindset every beginner should not have. I always say give your investments at least 2 years for
To
you to see a
grow.
significant difference. And I promise you, like after like in 2 years, you'll probably be like the one preaching to anybody that's willing to listen about investing because you're able to see the drastic difference from when you started to where you are, like
Where
in
you
a space
are.
of 2 years. Yes.
Hmm.
So that's basically
Yeah, I think it's really nice because it ties back to what you said about patience. Because I think many people, even newbie investors, right, they're thinking of, okay, how can I put this money and the next year I see so much return? So the fact that they won't instantly see the
yeah.
return on investment kind of limits them, and they're just like,
Mm-hmm.
I don't think this thing will make sense. But just what you mentioned, giving your investment at least 2 years before you then start seeing the visible
Yeah.
proceeds, and that would then motivate you. So let's make this practical. I know that you're a financial advisor, or at least you advise people. So let's drive this home for someone that is earning. I am going to use like a bulk sum number like 100,000 US dollars, and looking to invest, looking to be financially savvy, how would you advise them to
Is
break
that an
down this
annual
number?
income or
Yeah,
monthly
that's an
income?
annual income. That's an annual
I guess it's
income.
annual
So,
income.
or let's even make it $10,000 every month. So it's a lump sum, $10,000 every month. So how would you advise them to break this into like bills, savings, investment in such a way that makes sense and they're making good financial decisions? Because like I said, this money, if it's not properly planned, it can just go so fast, right? So what's your take on that?
So firstly, I think as when you anything K, that's kudos to you to be fair per annum. So after when you get paid a salary, of course, the first thing to do is to literally like just take out your necessities, which includes your rent, your bills, and every other thing that is important, right? So some people do that first. Others take out their investments first. So it depends on which, like I said, what you prioritize. If I were the one, I'll take out my investment first and then work with whatever it is that is left. So, but when it
Okay.
comes to, so I think, like I said, you have to ask yourself, like, what do I want my money to achieve? I think, what do I want my money to achieve for me? So, it is the message. I always say this: it is the errand you send your money on. That's what your money is going to go and do for you. So if you have 10K and you say, okay, I'm gonna use 5K to flex around town and go to the latest class of hotels and travels. Of course, your money, that 5K you have, of course, is your money. It's gonna give you that experience worth 5K. If you say, I want to invest this 5K to build wealth, your money, that 5K gonna invest, your money is gonna invest and give you returns that are worth 5K and even more if we factor in compound interest. So basically, I'm assuming that someone that earns 10K should have 4K, 5K to invest. I don't know, correct me if I'm wrong. Or it depends on where the person lives. But now
Well,
when you have,
it's yeah, it depends on where the person
yeah,
lives, rent, and all those
rent and all,
extra
yeah. Okay, let's just
extras.
say you have a
Yeah,
disposable income of 2K. Let's assume that you're also
at
doing
the end of the
lifestyle and
month.
at the end of the
Okay.
month you have the income of 2K. So the first thing to do whether you want to save or invest as a beginner is to understand your risk profile. So your attitude towards risk in the market. Are you a low risk person, a high risk person, a medium risk person? This will not help you know where to put your money. So are you putting that will tell you, okay, I'm averse to risk. I'll probably just my money in a high yield savings account and just leave it there and be doing my thing. Or I'm willing to take some risk. I'll probably put 50% of that 2K, put 1K in high risk in the high yield savings account and put the other 1K in the stock market. Or you can say I'll put 1K in the mutual fund account and put the other 1K in the stock market. So basically it depends on your attitude towards risk and what you're willing to do.
Risk.
So I always say like you should have both because having an emergency fund is important as well as investing. So if I were to invest £2,000 as a beginner investor, who might know what I know now, 70% of that money is going to go to the market, to the stock market.
Stock
That's
market.
every
Okay.
month, yes. I'm gonna put it up because I'm a medium to high risk investor. Actually, I'm a medium to high risk investor because I'm still young, so I have time to like take all the risk and recover. So I'll probably put let's say 70% of 2,000 is about 8,000, 6,007.
Yeah, 2006. Yeah,
Yeah, so
650. Yeah.
let's say 600 pounds or $200 of that's gonna go into ETFs, like ETFs to secure for risk, protect your money against risks. ETFs index funds, so basically, so you're buying a huge chunk of the market in one stock. That's gonna minimize my risk. And then the remaining 1K will now go to growth stocks and consumer staple stocks. So consumer staple goods are like the goods that we need every day. Me and you, like the
Okay.
groundnut oil we use, the water we drink, the toilet roll we use,
We're still gonna break this down because you're mentioning plenty things, but we are gonna break it down.
the body lotion you use. So those are consumer staple
Okay.
goods. So probably I'll put about 40% in consumer staple goods and put 60% in growth stocks. So it's not about investing. I always help again is for you to actually make the most out of your investment. To be honest, I feel like you need to. You are not. I feel like you must have like hands-on app. Like you must be fully involved, and I think that's what worked for me. Even when I didn't have like even when I just started as a beginner, like I always knew what I wanted. So even when I hear people say when they say things like, "Oh, Jenny, we have this investment to recommend to you," like the big players in the, I'll be like, I'll think about it, I'll get back to you, because you're the only one that knows your life goals, your current financial situation, and what you want to do for you. So I say this because people will be like, because there are months where I prioritize on investing in growth stocks. There are other months where I just prioritize on investing in consumer staple stocks. While there are months where I don't have chance to just look at the market. I want a laid back approach and I'm investing in ETF. So you just like research. So it's like investing, like I say, is like second. It has to be something second nature, something you have to do every day. So I just recycle like every, and then it gives me a more balanced approach. So when I'm dollar cost averaging, which is investing bit by bit into the market. So for you to invest your disposable income, your risk profile, let me summarize it again, so no one's going to get confused. Your risk profile is important. How do you want to take your risk? Are you willing to, optimize your money for growth, like aim for growth, or do you want to play it safe? Which one that playing it safe is not going to help you build wealth, right? So what I would say is play like safe with a little bit of your money and then invest the rest in the market. So there are various investment options available to beginner investors based on their risk profile. So let's say you're a low risk investor, then you have investments like fixed income instruments like high yield savings accounts, cash ISAs, and we have the bonds. Then we have
These are the low risk.
Yeah, the low risk
options.
investment. Yeah, options.
Okay.
Then we have the medium risk investments that are like the mutual funds, the money market funds, the corporate bonds. So that also like these are medium risk investments, ETFs as well, index funds. Then the high risk investments, we have private equity, commodities is medium to high risk investments as well. So when you now know your risk profile, so you now understand that these are the investments available to you based on your risk profile, then you can now choose which one you want to invest in. So you can say, okay, so how example, like when it comes to risk profile, it's just basically simple terms, it means how you allocate your money across like the market. That's basically what it means. Nothing too fancy. So what it means is if you're a low risk investor, for example, that means that at least 50 to 60% of your income of your investment should be in a low risk investment. Then the rest you can put it anyhow, or you can invest 100% of your investment in the low risk investment. But the point is, more than half of your investment, at least 50%, should be in the investment. That's how you're categorized as a low risk. So if you're a medium risk investor, you need to have 50% or more of your investments in a medium risk investment. So it's basically asset allocation, how you allocate your funds and your across like various investments. So this will not let you know, okay, I'm a low to medium risk investor, I have children, I want to like save. You can say, okay, put 50% of your investment in a low risk investment, like let's say treasury bills or a high yield savings account or bonds, for example, long-term bonds, and then put like the remaining half in mutual funds, for example. And again, another important thing to note for beginners is amongst these investments, some of them offer simple interest while others offer compound interest. So I say like understanding the difference between the both of them as well would help you to literally grow your wealth faster. So the money market investments and the mutual fund investments and stock investing are able to compound faster, to grow your money faster, while the high yield say, of course, lower risk, the lower the risk, the lower the reward, the higher the risk, the higher the reward, right?
The more the reward.
So lower risk investments are usually fixed, simple interest, so you're not gonna get more for your money. Your money is they're just helping you preserve your capital and giving you a token for doing so. And it's very funny because they are investing in the higher risk investments with your money, they are making money, and they're giving you back just bits and pennies.
They're giving you very little.
Because they are preserving your capital in quotes for you, right? So yes, I think that's just like the basic steps. It's nothing to choose a platform, choose an investment firm. I always say when you want to choose investment firms to start with, make sure you look at the fees, because that can impact your return on investment. So I think that some people that be like, oh Jennifer, I've had investment for like a long time, and my return is just X, Y. I'm like, did you check the fees of this investment you put in? And we know companies that they can change their fees every day. It's not every company that can be as transparent as Vanguard. You know how Vanguard put out notices that they were changing, and that's because they have the clientele. They're a bigger company. They know that they'll literally not make any losses because people trust their brand. Like how people buy designer bags because of the so they're able to put out. But smaller companies that feel like they might lose money or lose customers might not make it as bold or as loud. They might just hide
Yeah.
inside the terms and conditions. Might just tell you, oh, we've updated our
And
terms
you
and
won't even
conditions.
see it.
Exactly. They just come and tell you, oh, we updated our terms and conditions. I know we black, we don't like to read. We'll just be like, oh, terms and conditions,
Yeah.
Kim will just approve. Your fees have increased. And then, it's not going to see a rise or an increase in your RO and your return on investment. It's just stagnant or it's not there because your fees are eating, into this investment. So people always say things like, oh, if you invest in something like accumulating investment, it helps you pay less fees for investing. But oftentimes I found out that it doesn't work that way. You just need to just understand the company. And another thing I always say is, and that tip is diversify. So when I talk about diversification, I talk about across everywhere. Like diversify across countries if you can, across currencies, across investment platforms, across industries.
How can you diversify?
So when diversification basically means not putting your egg in one basket. It's like, how we say in Nigeria, don't put all your eggs in one basket. So, for example, I say this because, when I say people are not willing to put in the work to learn, that is so true. Like you see somebody, you're using one platform. Not to say it's a bad thing. You're using one platform for your savings. That same platform has your investment. That same platform has your pension.
I see. It can be very risky because if anything goes wrong, you lose everything.
It's funny. I remember I was talking to a client, I was questioning a client, and I was telling her, like, why do you have all your investment in one platform? Like, all your money changes. It was, I don't want to call the name of the bank, but previously, like a couple of months ago, I don't know what happened to the bank, and customers could not access their money. I remember she called me, she was like, Jen, this is what you said, because she wanted to top up her investment. We were supposed to buy a stock when it was low, and she didn't have money because that was the only bank she had. That's where she had her children's savings, her savings, their ISA account. Everything was on that platform. Like, you just have to log into the app. And I think after that day, she just started opening. So that's the thing. I got like, not because the company is bad, but number one, because you don't want to stock a situation whereby the company is doing an upgrade or the platform is doing an upgrade or there's a glitch or there's a hack and you cannot now do things financially because you're solely dependent on that. That's number one. And number two is oftentimes most companies in investing, they have their strengths. Like every other thing is just Jara. You know how you just cross sell and upsell, like to like make more
to
income,
add,
right?
but it may not be your
money,
strength.
But usually they have their strengths. Then they have their core things that they are very good at because they've been at it for a long time, but that's how they broke into the market. That's what made them popular. So usually I just find that in an organization and I stick to them for that thing, and then go elsewhere and look for strength. So it works for me because like I'm able to like, I'm not saying like have lots of platforms, but at least two, at least you should have 2 platforms, or if you can 3. So that's like for diversifying across platforms. Then for currencies, basically, for example, now we live in the UK, so of course if you have a savings account, a high yield savings account, or cash ISAs or guilds, you can invest in England and you're going to invest in pounds, right? And the thing about having, why I said diversification is it saves you from a lot of risk. So we have inflation risk, we have currency risk, we have shortfall risk, we have capital risk, we have assets risk. This is just like a lot of risk that can come with your money and your investment. So diversification helps you to reduce all those risks in the financial market, as long as it is not a systemic risk. So systemic risk is a risk that is basically caused, like when it happens, the whole global financial market is affected. So you cannot diversify your way out of that one. It could be something as simple as a bank like Silicon Valley, like a huge big bank. Let's say,
I remember that 2008.
Yeah, you remember?
I think when there was that
thing happened. I was like,
meltdown.
what? Like I was in shock. Like this again,
Yeah, because it affected everybody.
Exactly. So that is a systemic risk, right? Because you could not diversify. Nobody predicted it, so there is no way to diversify out of that because it's systemic risk that affected like multiple people, multiple industries, like that sector, that industry. So diversification would not have solved that problem for you as an investor. So not systematic risk, not the ones that you can literally diversify out. So instead of investing in just energy industries, you can now invest in energy, AI, agriculture, commodities. So basically, yeah, so when I talk about diversifying across currencies, it also protects you from, like, let's say, capital currency risk. Can I say this because you see how pounds and dollar used to battle. Sometimes dollar is higher, sometimes pounds is higher. Yeah,
Pounds.
so if you're invested across both currencies, that's not your problem, right? Because when
Because
dollar
either
goes
way, it's
high,
making money for
yeah, you
you,
make
right?
money. Yes, when pounds go high, you're making money. So you're making money both ways, regardless of how the market goes. So this could be, for example, investing in US stocks, for example. So whenever you want to sell back to convert it back to pounds, you're gonna sell your stock. If it was at a time where dollar is higher than pounds, means you're gonna get more return in pounds sterlings, right? And if it's a time when pounds is higher than dollar, it means that when you're investing, you're gonna get more investments for your pounds because your pounds is higher.
Yeah,
You know,
higher.
so that's what diversifying across currencies is. And then across countries, I say this, like, I tell people like, oh, they left Nigeria. Oh, Nigeria, my country. I'm not ever going to invest there. I'm like, So like, if you, I mean, having investment, they've got to be fair. Remember what I said, you don't know what's going to happen tomorrow, but just have one new government or something just happen
No,
one day, and,
just everything
and
just goes
everything will
up.
just be, and then I can be like, if I had known. I mean, we are seeing the wave of the Western people going back to Africa massively to go and chill. So what we are coming here, because they already have what we are lacking back home, so they're not able to go back and have a better life, while some of our people are still here struggling. You get my point? And I say this to all conviction. If we're not careful, a time will come and we'll regret it, because we'll probably still be strangers here, and then we'll still have nothing
And
back home
they
to
have
show for
gone
our
back.
hard work. Yes, because they're gonna take it all. So you literally have to play smart as well. So diversification, it could be buying real estate in America, buying real estate in UK, buying real estate in Nigeria, or investing in, let's say, private equity in the US, investing in bonds here, investing in money market funds in Nigeria. So that is that. So I thought, like, if I want to go to Nigeria today, I don't have to change pounds to naira. I have investments that will service all my expenses in naira. Likewise, if I want to go to America tomorrow, I have investments that will service and fund my trip in dollar. I don't have to
Expenses,
change.
yeah.
Yeah. So whatever I make in the UK and invest here, I spend in the
Stays
UK.
in the UK.
Yeah, stays in the UK. So basically, that is what I mean by diversification.
Man, girl, I think this episode has been for me, because I am aware that I need lots of like financial education, and that's why
Yeah.
I'm also intentional about learning more. I'm sure that many people listening to you will be like, "Oh, you're just saying so many things." It's interesting because that was what we started first with, like
Yeah.
financial education. I know you have a book. You wrote a book about investing for beginners, something like
Yeah.
that. So talk about the book, and we're ending now. Talk about where can people learn all this financial literacy? Where can people get more financially literate? Is it books? Is it just typing on Google? Is it simple Google search? But like, recommend books, and also talk about your book that you wrote.
I like that you asked this question about financial literacy, because, like I said, when I started, I wish the resources we had now, I had it then. Maybe if we did, I probably would have hit my 1 million mark like a long time ago. Because ebooks, like, I thought, like, one thing I've learned in life, so something I always say, which is why I say, when it comes to your finances, you have to prioritize. I've talked about it a couple of times. So there are two ways I call it: social climbing, paying for proximity. Other people call it networking now. Well, when I was growing up, what I heard my cousins in America, my mom's siblings, they call it like social climbing or paying for proximity. That's like using your money to like put yourself into places like where you want to be and all. So I say this because of mentorships and ebooks. So that will literally help you to compress time and achieve what that person has achieved through all the trial and errors the person has done. So when it comes to building wealth, books are the important and most important. And I say books, ebooks, because you're learning from a different person's perspective. Remember, I said, like, if I talk to you with other finance person, my take is usually going to be different. When I was invited by this company, this financial platform, and we talked about it, by the time I talked about my story and what I thought, they were like you're like, want to interview you because your story is different. Like, so if I'm teaching someone how to invest, one thing I always do is talk what has worked for me and see how we can tailor it to suit you, because this has worked for me. I've tried and tested processes, budgeting methods, investment strategies, and I have over time chosen what has worked for me. And it's amazing that I've done all this thing without losing any money in investments. Like, amazing, yes.
That's cool.
Because the thing about losses is people panic, which I said they don't have patience. So let me now digress a little bit. So when it comes to loss, there's unrealized profit and there's unrealized loss. So as an investor, once you let that sink into your head, this whole panic, oh, the market is down, oh, like it stops, because a loss is not final unless you panic and sell. Likewise, a profit as well. Unless you're able to release that profit, or the profit is compounding, the profit is paper profit, unless that money is in your bank account, or unless it's compounding. I'd say I don't get my point.
That
so
makes sense.
So all these things. So when like for example, if you read Rich Dad Poor Dad, people relate to that book because he wrote it based off of his experience, what he has seen, and his friends, you know, what he observed in his friends' families, which all of us can remember when you see that comment, they'll just post on Instagram where you say, my mom, and everybody be like, it's like we all had the same mom.
Yeah.
So you see that everyone finds it relatable because he's saying about what he has experienced. So it becomes easier for you. So as I say, for me, books is top notch. Like, I love books. Rich Dad Poor Dad, Psychology of Money, you know. Then ebooks as well, because ebooks, I'm sharing with you like what my research, but not just my research, but what I've also done as well that has worked for me. That if you apply it to you, it will work for you, pending until you now find your own strategy that suits you as an investor. So, getting general financial knowledge from like the websites like NASDAQ, Yahoo Finance, Google Finance, all those are amazing. All those websites, they give you like real-time insights of what the market is saying. And as an investor, one thing you must learn how to do is to listen to news, the boring news, because that's
boring news. I'm glad you said the boring news.
The boring news. Yeah, I thought like I can listen to the news and I know what's next to do in my investments. I know what step to make, what next thing to invest in, what I need to sell. I don't know if you get my point, like what position I need to take just by listening to you. Because remember we mentioned systemic risk, because whatever that's happening in the world right now is a systemic risk. You cannot diversify out of it because it is hitting every country.
Everybody.
Right? So now listen to the news and that tell you where to put your money, whether you should hold on, whether you should proceed, and what strategy to use to invest. You know, so all those are like things that will like tell you what to do. But before that, you should have gotten like the other like financial education where like you actually understand and relate. Because if in my ebook they're like step by step, like go here, do this, go here, do that, like go to this website, a list of dividend paying stocks, like things like that. These are stocks that pay dividends. This is the yield the stock is paid. You know, if you invest in this stock, this is how to ideally allocate allocate your funds to investment. If you're a high risk investor, this is how to allocate your funds. If you're a low to medium risk investor, you know, so all those like things basically you understand your risk profile and how to decide what risk profile you are. Like if you're a low risk investor, you know, because remember I said like generally like every financial advice you get is generic. Because, for example, if you're investing generally in the financial world, assume that from your 18s to like your 35, 40, 45, you're qualified as a high risk investor because they think you're still young. You can literally bounce back from losses, mistakes, increase your earning power. However, it doesn't apply to everybody. Because I could be 30 and I could have 5 children or 7 children depending on me, right? And I'm married. So I might not
your
be
own unique situation.
as much risk as my colleague that is 30 that has 2 children. You know, so it also contains insight like when to rebalance your portfolio, how to rebalance your investment portfolio. Because let's be honest, the way you would invest for when the market is in recession is not the way you invest when the market is thriving. The way you invest as a single person is not how you invest when you're getting married or when you have kids or when you're retiring, things like that. So that's basically what my ebook talks about. But when it comes to acquiring financial literacy, I always say like ebooks I feel like ebooks are like our, how do I put it, our trophy. So, you know, like it's just our own book without the whole publishing house drama and everything on like, you know, World Times bestseller. It's just our own, like
it's just you have it, you write it, you publish it.
You're just publishing for yourself and for your audience. So ebooks, books, these are like the top 2, like ebooks and books. These are like my top 2 recommendations, like my top 2 of all time. Ebooks, awesome. You're seeing investing from a different period. Like for example, like if you read Rich Dad Poor Dad, it's gonna talk about like how to US investment market. If you read this other book, I'm trying to remember the name, it talks about the UK investment market, like in UK investment terrain, right? If you read my ebook, I talk about investing in Nigeria, America, and UK because I have experience investing in all three, right? So
what's the name of your ebook?
A Beginner's Guide to Stock Investing. Yeah.
Okay.
So
okay.
yeah. So
it's
that's
available where I
available
know
on my website, www.thesavvymoneygirl.com, and also I think on my Instagram bio as well. The link on my bio.
I'm going to put a link to it. I'm definitely going to get a copy for myself because
yeah. So
I know I need it as well.
Yeah, so basically that's just it. But me, I highly recommend books. So then, when you read those books, you get those in-depth knowledge. When you're now like saying generic quotes, you're you're just on the financial market website, you're seeing trends, you're like, oh, okay, I heard this somewhere and all, and you have to be intentional. I always like, if you open my Google search bar, you know all those recommendations that Google recommend for you. If you see mine, it's always finance, side hustle, money, investment. Like there is nothing else. Sometimes it's like I'm tired.
Money.
One of my friends was like, Jennifer, is this all you search? Is this all you like think about? Like it is finance. Unless maybe I'm searching for something else that's important, I search like consistent. That's sometimes you see that thing pop up like on my suggestion feed on Google. Other than that, it is stock market, investing, finance, global finance news, and all. So even without me having to, I must read because I might open my Google to search for something else and I see a catchy news headline about finance. Yeah, and I just click on it and I start reading it. And I've gotten knowledge. So I don't forget my point. So it becomes easier for you that way. So yeah, so basically that's just my recommendation for acquiring financial education.
Amazing. Yeah. Thank you so much, Jenny. It's been beautiful having you on the show, sharing all your knowledge about financing, investments, and just making smart financial decisions. So I know you're on Instagram as the Savvy Money Girl. I'll put your link also.
Okay.
And yeah, do you what else do you do in terms of consultations? Do you do consultations for people? Because I know when people watch this, they will likely want to reach out to you for more personalized training. So where can they reach out to you? Is it on your
website? www.savvymoneygirl.com or Instagram savvymoneygirl. Just slide into my DM. I do one-to-one coaching, and I also have a paid community, subscription based finance community where we talk about finance, hold ourselves through the turbulent market, and everybody is always constantly themselves on the group. Currently, we are undergoing a 21-day financial and money challenge, which is why I said most of the things spoken about today, something we've been doing for since the start of April, change your money mindset. Track your expenses, set your financial goals, your investment goals, open an investment account, a new investment account, diversify. So that's the things we're doing in the financial challenge. So yeah, so basically that, because I also realized that with coaching it's easier to just get like she said, how you highlight the people because getting feedback, right? I think for us, what we do, that is basically what makes us happy, because initially people will come pay for coaching, which to be fair, if you ask me, is quite pricey. I don't want to spend that money and you're not getting value for your money, and at the end of the day they go back and they do not implement. So most people have that implementation problem, which to be fair, I don't judge anybody. We all do in some areas of our lives. That's why they have business partnerships, right? Where one person is the brain force behind the business, another person the financial force, and also, which is why I created the group initially. I'm okay, you know what? After getting the knowledge, what next? How do you start? How do you stay on track? How do you remain consistent on your journey? And everyone on the group now is addicted to investing. It's a very funny story. I had people that started at 0. Now they've built up to 20k in their ISAs. They have 50k in their ISAs and all. This kind of things it gives me joy. I have someone now that is addicted to investing. She wants to save for something, but she does not want to miss the dip in the market.
Invest.
Yeah, and she's asking us today in the group, what can I do? I'm the only thing for you tonight is just gotta look for how to make extra income. At the end of the day, so you can do both at the same time. So I think also having accountability partners and a community of like-minded people also helps. During my own time, I didn't have any. Like I said, I was just disciplined by myself because I knew what I wanted to achieve.
Try out, error.
And I look at myself now, I'm like, how did you even do that at a young age? I'm not even kidding. Even actually implementing because there are things that I want to do and I have information everywhere, and I still overanalyze it, and then I have analysis paralysis, and I'm like, is it an age thing? Because when I was younger, whatever I wanted to do, I just like
Just take action.
yeah. So I understand everybody, like when that implementation is not there, there's nobody to like hold them accountable, which is what the group is for as well, and it's amazing because it's been what, I think we're going on our third year now. I credited it in 2020.
Awesome.
No, second year. Right, 2023, middle to like second year actually.
Okay,
And
so
yeah, second year.
2 years. Okay.
Yeah, 2 years, and the feedback, the story has been amazing. People have literally like bought their first properties through investing in LISA. And sometimes when they're giving me job, I'll be like, all of you are doing me. I've not even bought property in the UK. You guys have bought property.
No, that's the whole point of being like a mentor, because you see like people that you're mentoring, you see the results from them, and it will also make you happy.
Yeah, that's true. So
yeah, beautiful. Thank you so much, Jenny. I enjoyed this conversation.
Thank you so much,
it's
Esther,
so good
for having me.
Yeah, you're welcome. Thank you to everyone for joining this episode, and I'll see you in another one. Bye.
Yeah, bye.